In this video, I'm going to share the biggest mistake I have ever made in my own investment journey. I think it's going to be extremely valuable to most of you watching this video because we tend to have these market corrections every few years. So the next time we have a market correction, you don't actually repeat the same mistakes that I actually made in March of 2020. Now, the weird part is that 2020 was actually my biggest mistake, but it was also my highest yearly return ever, and my portfolio was up over 147%. Now you might think this is a crazy high number. Well, even Cassie Wood was up 152% in the ARK Innovation, ETF. Anyone that was picking any kind of junk stock or anything pretty much was making money. You could just throw darts, close your eyes and buy anything and you're gonna make money. So it wasn't really some kind of a genius act, not from me or Cassie Wood or anyone. Although I think I did, pretty well, but I did make my biggest mistake ever, and I would have done a lot of things differently. And I'm gonna share all of that in this video, what kind of stocks I bought, what stocks I sold, what I did wrong, and what would I have done differently. And these kind of videos, they don't get a lot of views. So all I ask, if you could please press the like button and maybe consider subscribing if you're new and you actually enjoyed this video. Now, it all started pretty much in 2019, and I'm not a macroeconomic expert, but I do pay attention to some indicators that tend to show me that we could potentially have some kind of a market correction or some kind of weakness in earnings. And one of those indicators, which most of you are familiar with, is the yield curve, which is the 10-year minus the 2-year. And this has been very accurate pretty much of every time it inverts negative. We had, for example, what we had in the 2000, the dot-com bubble crash. We had it invert in 2007. We had the 2008 financial crisis. And it also inverted in August of 2019. It went pretty much a little bit below zero. And I was watching this indicator, and whenever I looked at it and then I looked at the ISM manufacturing, this is another indicator I look for. Normally, whenever it goes below 50, it tends to mean that we could potentially have weaker earnings in the future as the economy is actually starting to contract. So I looked at both of those numbers and I decided to increase my cash position because I do have long-term investments that I never sell, but at the same time I have some shorter-term kind of investments, some commodities, some gold, other kind of things with oil and a few others. So I took profit on all those kind of shorter-term investments and I increased my cash position, and then I watched the market skyrocket at the end of 2019, and in January, February of 2020, it was pretty painful, but I was just being conservative. So here comes the March 2020 stock market crash. No one knew it would be COVID, but these indicators were claiming that it's just something bad could potentially happen. So then we had the crash in March 2020. And we had it mainly because of COVID. We had a lot of businesses, they were locked down. Now, the first things that came to my head is I wanted to look for whatever is the most affected by COVID and buy it, because this is where the most value. This was my logic, and you have to pay attention and remember what I'm telling you now. And this is what I thought of. I thought of what is there something I could buy, maybe restaurants, maybe, I don't know, oil, and this is what I started buying. Whatever was affected the most by COVID and whatever could rebound much more whenever the economy actually opened. So I ended up buying a company called Darden Restaurant, which actually owns Olive Gardens here in the United States, and they own Longhorn Steakhouse and a few others. If you're in the United States, I'm sure you're familiar with most of those restaurants. It's a pretty amazing company. I bought it at exactly $54 per share, and then I sold it for 117% gain within a few months. This was one of my best gainers ever. Then I started looking at other things that were beaten down, and I bought Home Depot. Home Depot, I bought it somewhere around 160 or 162, and then I sold it for like a 35 or 40% profit. Then I actually bought Exxon Mobil, because I was, thinking oil went negative. I was thinking that whenever the economy reopens, I can potentially, kind of make money. Whenever oil goes up, then ExxonMobil is going to go up. This is what I was thinking about. I was thinking about how can I make the most amount of money in the short term whenever the market actually rebounds. Then I ended up buying a lot of speculative investments just because a lot of them had a lot of cash on the balance sheet and the Fed was cutting rates. And whenever the Fed typically cut rates, everything pretty much ends up rebounding, including a lot of the speculative investments. And these are very speculative, so it's not financial advice. I don't own them anymore. but I even know a lot of you maybe kind of participated in this. And I actually bought a company called Baby F. Those were pretty much, one of the first companies to make, the plant-based milk for toddlers, which wasn't pretty much available back then. They were pretty much one of the first companies to do it from Israel. They had a pretty good product, and the company had a lot of cash on the balance sheet. And, whenever we had the Fed cutting rates, as the stock was going up, we had a lot of the hype around the climate change. So I saw maybe Baby F could potentially, go up because it's also in the plant-based kind of milk for kids and toddlers, which was pretty amazing. And the stock went up. I made like 250% on this company. Then I bought another one called Hello Pal. I don't know if this company, I think, is going bankrupt, to be honest, but it had a huge rally. This was more of a dating app. They also had a lot of cash on the balance sheet before I actually bought it. And then they had some kind of news where they would potentially mine Ethereum from their own computers or something. I don't remember what it was, but it was something around Ethereum, and the stock skyrocketed. I didn't sell it at the top, but I made over 400% on this investment. And I had a lot of those, and I made 400% to 500% on many of those investments. But the reason I bought all these companies like Home Depot, ExxonMobil, Darden Restaurant, these kind of, small cap, gross OTC stocks. The main reason I did all of those things is because I was thinking, how can I make the most money in the short term? Okay, the economy reopens. I can, then sell Darden Restaurant for a higher profit. I can go and then, do those kind of small caps. Whenever Fed is cutting rates, they're injecting stimulus, these stocks go up, then I can sell them in 2021. This is how I was thinking, and this is how I made 147%. And I did also use some margin, which I don't recommend, but I've done it before. I know exactly the size of what I should be doing. Now, the biggest mistakes that I made, and you might be wondering, what is even the mistake? You did all those things, you made all those returns. What is the mistake? Well, the mistakes that I made was actually not thinking beyond 2021. Because I did, for example, buy Darden Restaurants, I sold it. I bought Home Depot, I sold it. I bought ExxonMobil, I sold it. I bought all these stocks and I sold them. But then after I sold them, I had to pay much higher capital gains. This is first. Second, after I sold them, I did not know what to do with the money because everything else was pretty much up. Together, the entire market was up when I was selling Darden Restaurants and Home Depot. So I did not exactly, know what to buy. And then, I kind of had to buy at much, much higher prices and pay much, much more taxes. And it was a huge hassle. Now, what I would have done differently back then is I would have looked at stocks that I actually wanted for the very long term. But I did not do that. I pretty much paid attention to everything that I can make money on the short term. This is, one of my favorite stocks. I always wanted to own the stock. And this is AutoZone. AutoZone crashed to around, $690 per share. And a few years later, it's sitting at $2,400. So this is a stock that I always wanted to own and I missed it. Another stock that I always wanted to own was Visa. Visa stock went down a lot and then, it rebounded. And the whole key with those things is, and the mistakes that I made, is I should have been buying these longer term compounder type of stocks that you could buy and hold. Because if you do like I did with shorter term investments around, oil and stuff, you're going to make a lot of money. And even with the micro caps, but then you're going to have to sell them and buy something else. And whenever you're buying something else, it's going to be at much, much higher prices. It's not tax efficient. It's a lot of hassle. So what I would have done differently, I would have looked for these stocks like AutoZone, like Visa, like all these kind of stocks that I want to hold for the long term, to buy them then and hold them. Because you're always going to find shorter term investments. Maybe some companies that has a lot of debt or some company trading below liquidation value. These are not the stocks you want to buy in a stock market crash. You want to buy the longer term investments because those companies go on sale every pretty much 6 to 8 years. But you're always going to find these shorter term investments. And this is what I did in 2022. I was looking for longer term investments as the market was crashing, and I was able to pick up some pretty good buy and holds in 2022. And this is what I was telling my group members. They were giving me kind of stocks like GTN, Great Television, and some kind of radio and television companies trading at 2 or 3, 4 times earnings. I told them this is not the stock you should be buying in 2022. we should be looking for longer term investments, because those are the only stocks that go on sale every few years, but you're always going to find these radio companies and shorter term investments and macro kind of investments. So this was the biggest mistake I ever made, that I haven't really, looked at stocks that I want for the long term. I instead focused on the short term and how can I make the most money when the kind of economy reopens, instead of what can I buy and hold for a long time and actually get a higher CAGR. Because if I bought something like AutoZone on its valuation around $700 per share, I would have had a CAGR of around 20% every single year, meaning I could just hold, AutoZone at this price and I could make 20% every year without me doing anything, without me selling them, without me buying them again and going to find another one and pay all those taxes. This is what I should have done. And I haven't done it, but I've kind of fixed my mistake a little bit in 2022. And I looked for the longer term kind of investments. And the next time we're going to have some kind of a market crash, I'm also going to look for these companies that I want to hold for the very long term and not actually focus on shorter term stuff. I can focus on short term whenever we have the market going up and everything is fine. I can find those opportunities. But whenever the market's going down and you have stocks like Google and Microsoft and Apple going down, being on sale, this is the time you should be buying them and you should be ignoring the short term. So this was my mistake, and this is something that I learned the hard way, and I hope it helped in this video. So the next time, we have a market correction, and we will have a market correction maybe this year, next year, the year after, you're going to actually not make the same mistake I made, and you're going to take advantage of those opportunities to build longer term positions at much lower cost basis, which are going to give you a higher and higher annual return. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another one.